Good morning, everyone. My name is Josip Causic, and welcome to Trading in Review. Today is November 25th, and I hope you all had a very good Thanksgiving. So, one more time, we are doing something new here. Here's a room number, and if you can download the Speak Up app and then type in this room number 22421, you would have a private chat with me during this 1 hour. And I would greatly appreciate if you can use that. I see one of you just logged in. It's very good. Let me just confirm it. Got it. So we are good. We're good to go. And I'm going to now move the slides, but please record this room number 22421 because this 22421 is once when you download the Speak Up app, something that you need to have in order to get in. So take a moment to read the disclaimers here. So everything that we do here is for educational purposes only. I'm glad you're confirming that sound is good and that we're good to go. We are not financial advisors. Please take a moment to read the disclaimers even if you need to stop it. And a place where you can get in touch with me is right here at the website, and without uh, the without any uh, further moment in time being spent at anything else, we're gonna pull up the SPY and look at what the SPY is doing this morning on half day. So starting from the top to the bottom, as you can see over here, we have 9-day exponential moving average and S&P 500 current price being above. So that would indicate that we are on the bullish move, and we have been on the bullish move for pretty much 10 sessions out of the normal according to the standard deviation 3. So there shouldn't be surprise if there's some kind of pullback. Also, what is interesting over here to observe that we do have implied volatility of the calls and the puts completely emerging at each other, and price action today is very much limited within this top part of the chart. So when I bring up here the FinViz, I just want to take a moment to show you so you would know exactly what FinViz is showing that the market is currently doing in terms of the price action. And there shouldn't be surprised that on a half day there's not much movement. So market is going to be closing at 1.5 hour from now. So there shouldn't be too much expectation of any kind of move. So we are now looking at the setting up the trade for a future, and one that I like to look at is actually Tesla. Now Tesla came up with some pretty interesting news this morning, and you can find it down here under the Tesla right here. What is going on in details. Self-driving device has been offered to everybody who already owns the Tesla, and this is setting up for a nice breakup to the upside. So what we're going to do, we're going to actually structure a trade on our platform here, and then we're going to record it using the sticky notes. So Tesla is currently just lifting above this 9-day exponential moving average. And because it's lifting above this 9-day exponential moving average, there's a high chance that it might continue to go even higher. And Tesla being one of the strongest one out of all these other ones, there's a good possibility that it might actually go as far as a 195. So 195 is our current target where we are looking, but we want to make sure that we are not only one who are considering the price action at 195. So when I bring up the option chain over here, and I take a default setting here in terms of the expiration, I'm going to look at the 195. So of course we need to add a little more strike prices there. And I'm going to add here, not just 3, I'm going to add here like 9 strike prices, which is going to put within my vision the 195 level. So 195 level on the call side is what we are looking. And when I move this yellow rectangle in it, you would see how with this yellow rectangle at the 195, we have a lot of activity over here in terms of the both open interest and also volume. So we are now aiming to hit the 195 as a possible target, but we also need to make sure that we do have a place where we're gonna put in our stop. So uh, when we go back on the chart and we re-examine where the current price is, and one of the easiest ways to do that is just to look at it. What is the current price versus where is the low of the day? So over here we see that low of the day is 182. So 182.87 is approximately the low of the day, and if you put a stop at the 182, and we are currently trading at 183.68, that's about $1.50 of the stop versus our target being almost like 10 points higher. So this is a very good risk to reward trade. So what we're gonna do, we're gonna buy one in the money long call, and we're gonna then sell 195 out of the money, out of the money, out of the money. 195 call. So we are now pulling up the option chain here, and we are creating the position. So when I go over here on the long call, I'm switching this to the bullish, and that's going to be a bull call spread. The expiration is going to be this December, and current price that is being filled in is 183. I kind of don't like that, so I'm going to just lower it a little bit down to the 180, which is a round number, and it's easy to kind of remember. And we're going to have 15 points higher the 195 as a target. So when we click OK, this actually calculates the cost at $6.80. So if this is now brought up on the risk graph, and we're going to just zoom in over here and see that we can possibly make a profit of $817 while we're risking only 682. So the distance between the current price and our target here at 195 is what we are really interested in placing here. So let's place this trade in a paper trading account, Thinkorswim, and continue to make sure that we have this done properly. So 180 currently has the volume of the 1,528 contracts. 195 has also current volume, so 1,182 contracts. So could it be that this is already a bull call spread traded by the many traders today? Very possible. So how do we do this? We simply go buy vertical. We move this exactly where it should be, which is at 195. So that's about the $6.78. And we are now one more time observing that our maximum profit on it, and let's just change this color in a green, is $822. So in case the price action goes to 195 or above, and now it's a December 16th regular monthly expiry, we're making $822 if we execute this trade. So now I'm placing this trade, and what you can see over here, it's working order. Now for this order to get filled, I might have to drop it by about 3 pennies, and every time when I drop it by 3 pennies, my risk to reward changes. So over here, if I change this to 675, then my maximum profit is only 825. And I'm saying only, but in reality, this is still better than our overall risk. So I'm gonna send it in here and see if I got filled. So there it is. I did get filled at that price, and I'm gonna just point out to you that this is where I got filled. So it's exactly 8:10, and we got filled. And I'm gonna just quickly enter some of this information on a blank piece of paper here, and then I'm gonna copy it a little bit later onto the sticky card. Okay, so Tesla is filled exactly right now with the current price being at 183, let's say 40. So if we have a Tesla at 183.40 and our target on a Tesla, I'm gonna just create this so it's more visual. So we have a word set here. So we have a target right here at 195. We said stop is going to be at the 182. Where did we pick that particular stop? We picked that particular stop for simple reason that our chart was indicating to us that that's a good spot to be. So one more time, when we hover over the low of the day, which is the 182.71, and then we give ourselves a little bit more breathing room, we decided to put a stop just below the low of the day. So LOD, low of the day, was at 182.71, and we have given ourselves a little bit more room to the downside. And of course, the Tesla is currently sitting at the time when we entered it, was sitting at the 183.40. So we have a decent room to the upside, and we have a somewhat cushion or a protection to the downside, and we should be aware of it that this is very good trade in terms of the risk to reward. Now, how do we exit that trade? That's one of the things that I was getting a question asked multiple times, and I want to show you on a thinkorswim once when we get filled, how do we simply structure this. So we can take this and we can be more concerned about the stop than about the exit. So we're going to click the opposite order, and over here on this little dot, we're going to be changing the conditions. So the conditions that we're going to be changing are going to be, first, make sure that you change it to the good till cancel, and instead of the limit, you're going to put on a market order, because you can't even predict where the price of those two options is going to be if this Tesla is at or below. So make sure that you have the sign lesser than or equal to, and then you type in 182. So when you type in the 182, that's going to appear as a second condition on this ticket. So on this ticket right here, we are reading the statement, and I'm going to make this in red because this is my stop, that if the Tesla is at or below 182 and we still have some time value in these options, I'm going to be then exiting it, and keyword is at the market order. So this MKT and GTC stands for the market order, good till cancel. So let's take a snapshot of this just for a future reference, because sometimes I get the emails from students asking me about the trade, and it's easiest for me, rather than digging through the old historical data, to simply pull up the document that I have created, and then in the document that I have created, I can just simply have information that I need in terms of the what was done that particular day. So here's a entry ticket, here's a stop ticket. Now, what I like to do, and this is just me personally, for a target. So for a target, what we can do, we can simply and I'm going to go back again on the platform, and I know I'm moving quite fast through this. I will go over here where it says a create alert, and I'm going to create alert when the price is at or above 195. So if the Tesla is at the 195 or above, in that case, my phone is going to get text message, and then I can actually decide what to do and how to trade about it. Now, if I want to make this a little bit more live and a little bit more interactive, okay, I'm going to be placing that same trade and then adjusting it, like in order to give myself more room to grow. So let's just play out the scenario, okay? And this is a scenario that we're going to play out verbally, and then we're going to adjust this going forward. So the time comes and the price action has rallied up all the way to 195, and it's not stopping. It's actually ready to go even higher. So if we came here and we have our problem with our sold unit, which is 195, what we can do, we can actually move up that 195 to, let's say, 200. So when we move up our 195 to 200, then we still have our existing 180 position, but rather than picking up the $15 move with us rotating the 195 to 200, we can then pick up additional 5. So let me now execute this, assuming that this is all taking place by, let's say, today, because today we do have a action right here. And we are now looking at 180 and 195. So this is just for educational purposes only. I already read this, I disclaimed it, and I'm now just giving you the theory behind it. So here it is. So I'm firing the same trade, and then I'm planning to adjust it. So this is strictly for educational purposes only. This is right now going for $3.40. So I'm going in for $3.40, but because it's a $15 wide spread, my maximum profit is at 1,600. If for some miracle this does get filled, which I don't think it will, but let's just go down to some round number that I know it's going to get filled. 330. 1 Mississippi, 2 Mississippi, 3 Mississippi. Well, they're not giving it to me. That's interesting. Okay, you know what? Let's just change it to the market order. Again, this is for educational purposes only. Do not do this with the live, because there is a lesson that I want to teach here. It's crazy. It just doesn't want to give it to me on the real market. This is just not meant to be. Okay, let's change it and put it in at cancel and replace. Okay, let's repeat this one more time. Let's repeat this one more time. So I'm taking this order, duplicating it. Now it says a 330 debit, 325. That should get filled. You should hear ding when it gets filled. You know, I actually think that I know why this case is, because we don't have a $25,000 and they're not letting us trade the option on a day of the expiry. So let's not do that particular cycle. We're gonna just use the same strike prices but move out to, let's say, December 2nd, which is one more cycle out. So the next cycle that we have is December 2nd. Now notice the price action is different at that particular point. So let's just get filled on that. Okay, 590. Okay, so let's now walk through this trade and just explain what happened. Okay, so now we are putting our thoughts forward, and we are now looking at the Tesla being at the 195, and our 180 call is 15 points in the money, but our 195 sold call is preventing the further profit. So what do we do in that case? So if I now show this one more time on a December 2nd, what we can do in that case, we can just rotate, and I really mean this by rotate, by buying this back and then selling the 200. Now, of course, the prices are going to be different than what they are now. So what this thing would do in the pieces, right? So I'm going to have now 3 sections here side by side. 3 sections side by side. I'm going to have a word original trade. And I'm going to move this so it can be within your vision. So original trade, adjustment, and then outcome, which is a new trade. And if I now walk slowly through it, I do what Steve Covey says, begin with the end in mind. I want to end up having sold to open 200 call. That's what I want. But when I did the original trade, I sold to open 195 call. And of course, I had down here bought to open 180 call, right? Which is this right here, right? So the reason why these legs are broken right here at this particular point is because this is a 180. So if the Tesla does not rally up, right now it's at 183 and some change, but it starts going down to 180, I can only lose up to 180. I'm not losing anything lower than that. However, if the Tesla start going up, then I have a problem, because at 195, my profit leg is broken. And that's exactly why I'm concerned about this particular trade. If the price action, you see right now, when the Tesla is originally, what do we say, at the 183.40, I don't need to worry too much about it, because Tesla has another 10 plus points to go. But imagine the Tesla is right now at the 195, or let's say 194 and 40 cents. I still have this sold 195 call that I would need to buy to close. BTC means buy to close. So in this case, I would be buying to close 195 in order to be able to sell to call another one. Which really, in reality, this adjustment is nothing else but another bull call spread. So yeah, we will be paying more in an option commissions, which is only 65 cents to do this in order to adjust it. But then what we would ended up having is a spread that is actually 20 points wide. So the difference between a 180 and a 200 is a 20 point wide spread, while this bull call spread was only 15 points wide. So this was like a 1.5K, right? Because you need to multiply by 200, while this particular trade is also bull call spread with the 2000 or 20 points wide, right? So that's what it is. So one more time, if I can just go back and show it to you, that this right now is a spread that is only 15 points wide. And if I want to change this, then I will need to be buying this 195 and selling the 200. So I'm going to take a snapshot of this. So it's kind of like slow motion. Be aware what is taking place. So one more time. This is the current situation of what is taking place. And that's that original trade. What I want to have when all these yellow lines go up, 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 And I can just make sure that you understand that in addition to the position and the volume, we can actually alter this to be intrinsic. So when it's intrinsic, we still have this green POS stands for a position open 1 plus and a position in red minus. But if the yellow mean intrinsic value reaches that point, then what we would do, we would buy 195 as a vertical, and we would sell 200 if that time comes. If that time comes, we would pay the debit, whatever the debit is, but we would widen the spread. Okay, so I'm gonna now lower this to some crazy number that I know I'm not gonna get filled. But the reason why I'm doing this so I can take a snapshot of what really I want to do. So here, while I'm waiting for this order to get filled, I want to explain here what is really taking place in terms of the ticket, okay? So this is now working order. So this working order right here is showing that I have a buy order, which is in green, that is going to close this red position that was a short. And the moment it closes, it's going to basically move this from 195 to 200, like just it's going to move a little bit higher, and then I'm going to end up having still this position at the 180, and I'm going to have in the red position right here on 200. So having explained that, let me now type in the outcome. Now, of course, this is working order when the Tesla is at 195 or approximately that area. In that case, I actually want to have a more breathing room to the upside. I want to have a more of this uh, room to move higher and higher and higher. So let's now do this, and then we're going to put that in the sticky cards. So I'm just changing this. I'm just changing this to the market, firing it in, and you will see how it just moved. So if I'm now fast enough to capture the, you would see exactly what had happened here. So you have like a history of the activity. So my order was working order, keyword working order here, and then it was no longer a working order because we had the top part of the screen says you cancel from a 70, you got filled at 78. BOT stands for buy to open one vertical Tesla for that same cycle. 195 was the unit that we exited or took a beating on, and a 200 is the one that we sold. And over here it said like you got filled on this replacement. And what really happened here, where I had originally this mouse and I highlighted this in blue, was the unit that was stumbling block, because by then intrinsic value was all in yellow, and I had moved it to 200. And why would I do that? Because on a chart I had predicted that price action is gonna go up to 195, and then when it went to 195, it didn't stop, it continued going where? Higher. So let's assume now that it goes to 200, and then I get one of the texts here from you saying, hey, look, if you can move this again higher, then maybe you can roll it up again. Yeah, I could. So another thing that we can do here, and just to kind of reiterate, is I can close again this one. I can buy this one. I would need to know where my next target is, but let's assume my next target is 205, right? So then I would be opening the 205 as the next level. And let's drop this again to some crazy number that I know I'm not going to get filled. But I just want to show you that, like in this case, my intrinsic value is increasing. I'm going to talk about the delta in a moment here, but what I want to make sure that you understand is how I'm filling up these sticky cards. So if I have here the sticky card, and I'm gonna just type in the Tesla, and we obviously are looking at the December of this year, 2022, and whether it's a December monthly or a December 2nd that I just did, that's not quite the point that I'm trying to do. What I'm trying to do here is to give you all the steps of what is really taking place. So my entry originally, and let me just pull up this Word document, because when I'm teaching and talking at the same time and typing, it's kind of easy to overlook. It's at the 183.40. So we're long here. Entry is at 183.40. 183.40. Stop, we said it's about the 182 even. That's about the $1.40 lower. My target was a 195. That's where we originally sold the one, but my final target is about 200. So this is kind of clear, and I want to make sure that I have this side by side with the chart. Side by side with the chart. Just bring it up again. That's spread right here, and we are now working on debit spread. Okay, so now we have a debit spread right here. So underlying asset, it's still Tesla. Let's use exactly the one that we filled in initially, December 16, 2020, which was very first trade we placed within the first 10 minutes of the market being open. I mean, not market being open, us starting to trade, right? So this was at 8:10, 10 minutes after, and we got filled here for 675. 675, okay? So we got filled for a 675, and what strike price did we involve? Well, we have a higher strike price, which is basically our target. So our target was, okay, I'm sorry, this is earnings, that's not quite what I wanted to talk about here, but if you do want to know when it's earnings, you just scroll it down here, and you would see that earnings have already passed in October. So they show up once a quarter, so they're not coming up till next year. And obviously my contract it's irrelevant. So in this case, I would say it's not even a part of the issue here. So I'm gonna just type in not available, but it's irrelevant to us because we have a contract here that is expiring next month, December 16th, and it's composed of higher strike price, which is 195, and it's a call, and lower strike price that I like to call in the money, because if we were at so underlying asset, I should also type in where the price was, 183.40. So obviously you can see visually here that 180 call was $3.40 in the money, but I paid for that $6.75. So obviously I'm paying something extra because it has a time value, and this time value is this December 16 expiration. So entry, exit rules. So be aware of it. We have put our exit rule, okay, for if the price action is at 182, okay, or less, then we are exiting, right? Now I have a target at 195, but that target is not really a target, that's more like a alert. So when the price action is at or above 195, right, my alert my alert. And I know over here it says entry, but that's not quite what I need right now because I already have entry placed. This is the way how this card looks, right? So just be aware of it that when I present this to you, you understand the whole concept behind it. So recap step by step. 9-day exponential moving average. Currently, we are just above the 9-day moving average, and we have a first green day after being down for a number of days. Okay, between the calls and the puts would be better to sell, but we did not sell the puts. Gray line represents the call. We actually end up buying the calls. And because we are buying the calls, this is now actually looking good. So be aware of it that we want price action from the current price to rally up at least to this red UFO, which is 195. But in case it reaches the 195, we have ability to do this, what I like to call rotation to the upside. And what do I mean by rotation to the upside? By the rotation to the upside, I mean exactly these steps that we have spelled out, right? Adjustment. Price has reached within those red UFOs, and for some reason, it's just not stopping, it's going up. Of course, we do have a possibility at that point to simply say, you know what, I'm very happy with my profit of the $830 when we hit this 195. But in case I want to calculate deltas, what is really taking place? Well, think about what is the delta of my contract right now if we are sitting at the 183 and we have a 180 strike price. Well, rather than you wrecking your head trying to figure it out, you can just switch the information to the delta. And what is the delta? Delta is how much for a $1 of the upward move am I making? So if we go higher from a current price of the 182.65, so that means most likely there's a little pullback taking place in a whole market, not just on a Tesla, but in a whole market. Let's just re-verify. There it is. It went down to the open, and now it's bouncing where? Right back. But Dow is a champ. It's holding up like a really strong uh, underlying. So be aware of it that the Nasdaq is where the Apple is and the Microsoft is, and of course Tesla is. And right now the technology is I don't want to call it Christmas, but it does look like a Christmas because there's a lot of red, a lot of green, and it even has some black here. So really it's not very good area to trade. Amazon and Tesla, they're virtually neutral. But if this thing goes higher and starts filling up the gap, then the Tesla is going to go higher. And as of now, you can even make an argument, although we have only an hour and a half left, that most likely, we are going to continue going higher because from this low to this point, we have a higher low, a little bit less higher low, but it's still indeed higher low, and again the higher low. Well, on a low volume day, such as day after Thanksgiving, Black Friday, it's kind of expected that something like this is going to happen because if there was a real conviction, you would see it right here. So observe right now there's a 60% of the stocks are going up, but let me change this in the red. 34% of the stocks are going down. And most of them are in what? In a technology sector or in communication. And consumer cyclical and consumer discretionary, they're just not participating. They're just not participating. So just be aware of it. This is what is taking place. So going over one more time this trade that we just discussed. So we have a trade on a Tesla that we entered at 183. we have placed the stop at or below 182. So that's mean even if we get stopped out, we are not losing all the money because there's still some time value. But if this thing start ripping, our delta is going to be increased. So think about it. If we have moved from 183 to 195, that's about the 12 points higher. 12 points higher would be equivalent to our physical underlying having a delta of 80. So I'm going to repeat this one more time. If we move up additional 12 points, so just picture this. This is a 170 and this is a 182. That's where that 12 points become. Our original delta that was about the 60, now it's dancing as around 58, would become 80. So in that case, it would make sense for us to do this adjustment. And this adjustment would not touch this 180 because this 180 that had the delta of 60 at this point would be delta of 80. So that's mean for every dollar move up, this is going to make not only 60 cents out of the 100 cents, but 80 cents. So then why in the world would I not keep this 180 call and let the baby run all the way to what? The target of the 200. So now if it reaches a 200, can we predict what our delta is going to be? Well, in that case, which is additional $5 higher from 195 to 200, we would need to look at it not 170, but 165. What would be then? Now, of course, this is slightly going to change because be aware of it, the delta is not fixed. And why do I say the delta is not fixed? So just observe this at the moneyness. Actually, what I'm going to do here, I'm going to just do 2, and I'm going to open it over here just to show it to you. So here's the delta of the 58. Here's the delta of the 57. But I want your eyes to open up. What happens with the delta as the time value goes out and expiration approaches? It increases. So be aware of it that our trade that we originally have is for a December 16th. And as the move takes place, our delta is increasing, but also this volatility, IV, is actually being sucked out. So it makes perfect sense to rotate or simply to pyramid or simply to exit the at the money sold unit and replace it with another unit that is out of the money higher. So having said that and being aware of the time, we're going to now jump back on the chart and just do an overview of what the whole market is doing on the monthlies. On the monthlies, I'm going to go first through the Dow Jones Industrial Average. And you would see that right here we are in November and we have, with the conviction, taken out the high of the October. And a lot of people were afraid of October because 2 Octobers that stand up in a historical mind of the US trader was October of 1929, which started the Great Depression, and also that shakeout during the Reagan era back in October of 1987. Well, obviously, we're living in 2022 and things are quite different. So, if there was a downtrend right here, which there was, and I'm going to just use the red line to kind of mark this, you would see that this downtrend on the Dow Jones is broken to the upside. Now, be aware of it. Be aware of it. Stock market is not economy. Economy is not stock market. So you need to look at the rest of the indices to conclude if the things are the same. And you're observing here that things are not the same on middle class America, which is a Russell 2000. It has 2,000 stocks rather than just 30 of these multinationals. The trend is still attacked to the downside, no matter which way you want to do it. There's two ways of drawing these. You can just be touching these extreme shadows and observing that we have park on the belly side of it. And because November still has a Monday the 28th, Tuesday the 29th, and Wednesday the 30th, could we still go back in the range on a Russell 2000 of the October? It's very possible. That's why you should be aware of it. The Dow is only 30 stocks, and as of now, it's leading to the upside. Now, on the S&P 500 situation is a little bit different because S&P is, as I say, mother of all products because it has the most liquidity and most liquidity. Based on today, we're going to know whether we are closing above or below. But the NASDAQ, and this is where our Tesla is barely above October high. Barely above the October high. So we're going to do the same analysis that we did with the four major indices with four sectors. So just be aware of it that this, as of now, it's what I like to call the mixed bag. If you need to really be bullish on something, you can be bullish on a Dow Jones. If you need to be bearish on something, don't be bearish on Tesla, go bearish on the Russell 2000 or on its ETF, exchange traded fund, by the ticker IWM. So having demystified what the current price action is on the major indices, I like to look at the four main sectors. Now, these four main sectors that I'm looking at are daily sectors of the XLK, which stands for technology, XLV, that represents the healthcare, of course, the financials, as well as communication. Now, with these, I have UFOs plotted, so you can actually see on a daily how everything looks, right? So we are kind of stuck here in no man's land, in between the red unfilled orders and the green unfilled orders. So be aware of it. That's the communication. We need a little bit more time to gain the correct information, what we are going to do. So if we are now looking at it, then we're going to look at it. Okay, Mark, it's good to see you. Joe, good to see you. I'm looking now at next one, which is a financial, because be aware of it, the financial market is really, really strong. We have taken up this, the old technical analysis calls this cup and handle, and this being the rim, and this is a handle, and now we're breaking to the upside. So if this could go higher, we should actually keep that on our watch list, because this is a significant level for a number of months. And if the banks are taking into consideration increased interest rates and economy is strong as current government claims, then there is a high chance that people are going to pay their mortgages on time and that everything is going to go up. So there is a high chance that we might have on XLF move higher. Now that doesn't mean you need to trade XLF. You can pick the strongest of the XLF. So let's say JP Morgan Chase, right? JP Morgan Chase has already taken out this level of the 132 and it's just ready to go even higher, maybe to 144. So let's quickly evaluate using the same system that we did before if we are about to place the trade on the JP Morgan in this last several minutes. So what I want to do here, first I need to decide, do I want to trade the weeklies or do I want to trade the monthlies? The monthlies are these one in black. And one of the easiest way to look at it is simply to look at the implied volatility over here. If we are buyer of options, We want to have our numbers to be at the lowest possible level. So over here we have a 24.38, and over here we have a 24.20, and over here we have a 24.42. So they're all 24, 24, 24. But this particular one that is exactly at the end of the year, in my opinion, based on implied volatility amongst these three trades, looks the best choice. Now, I'm going to talk myself out of this trade if I'm the only one entertaining the possibility of placing something on a JP Morgan and there's no activity on the volume. So I want to look at the call side, and I want to look at what is called volume and open interest at the same time. So I'm pulling up the 14 strike prices out, and I see the clear target at the 145, and we have observed that target, even like blindly looking at the finviz. There it is. So there's your 143.60, and of course they don't have 143.63 strike price, so they picked the 145. So they're definitely targeting that the JP Morgan is going to rip. It's going to rip to 145. So then next question becomes, if I know I want to sell this for about $1.94, where do I go in? Well, not all the answers need to be on the same cycle, because over here we have a nothing traded today, nothing traded today, nothing traded today. I can actually look at the regular December to see in the moneyness what has been traded. There it is, ladies and gentlemen. 130 and 135 has been traded quite a bit, even on a low day today. Let me just stop you here for a moment and pull up the calculator and see if I can communicate this information to you more clearly. On a day like today, when there's not much activity taking place, this $6.75 is $675. Okay, that's for one contract. And how many contracts were traded just this morning when it's like Black Friday and most of the traders are already at Hamptons or only the junior associates are trading? 1,752. If you multiply this, and then stop here for a moment and think about it, who in right mind has a 1.1 million that has invested in it? It had to be the institution. It's not the ordinary Joe. So somebody knows something. So I'm going to be picking the 135 and I'm going to be selling the 145. And let's do that quickly using our platform here. So I'm pulling up the option chain. I'm typing in JP Morgan Chase. I'm picking up the bull call, and be aware of it that for a bull call that we are picking up on a thinkorswim platform, we have concluded just by looking at the old activity that JP Morgan Chase had a 24.4. Let me circle this one more time so you kind of don't forget how we arrive at that. We looked at all these different numbers and we concluded that this from everything is actually, I'm sorry, 24.2. This is the one that we want, December 30th. So I'm just so conscious of the time and I want to make sure that we got this thing right. So we're altering this into the December 30th. So for tax purposes, this would make perfect sense for us to trade, right? Because we're going to be getting out just day before, because we don't want to hold this all the way to the expiration. Last day of the trading is a Wednesday, December 30th. We are targeting 145. We're buying the 130. It's a $15 spread. It's a $15 spread. Right now, for that $15 spread, if I click here, risk graph, we're risking $700 to make $800. So that's very, very good trade, right? So be aware of it. This is I need to make sure that this says a bull call spread and not a bear call spread. Just give me a second here. So we need to flip this. We are buying the 130 and selling the 145. Let's make sure that we see. Yeah, this risk graph needs to be pointing up, and the reason why it needs to be pointing up because the price that we anticipate to go to is 145. 145. Okay, so here it is. This is where I want it to be, and it's still the same. So my no, actually, it's a flip side. I'm risking 800 to make a 700. I don't like the outcome of this. Let's just go back to the chart and not rush this. And the reason why I want to go back on a chart and rush this because it's green UFOs that we need to look at it in order to make a decision on that one. So let me now pull up one more time options with options. Did I modify something? Yes, I did. No, actually, I didn't modify anything. So let's just do this. Open a page. Um, options with options. Give a second. JP Morgan Chase. Mark, I see that you have lowered your stop, because you thought the price is going to go lower. Be aware if that changes your risk to reward quite significantly. I would rather leave the stop the way it is than change it. Okay, so I'm looking here on a daily. That it is. You see, even before we reach the 145, we have a speed bump at 142. So we're kind of latecomers in that, but at the same time, you can say like, well, not really, because we could continue go higher. So we are not selling any of the bull put spread, or though we could use the bull put spread to finance this. Is just like what I'm concerned about here. We've been in uptrend for 30 days already, 30 sessions, and according to standard deviation, there might be a little pullback before we go in, but still, I mean, overall, this JP Morgan, in my opinion, looks way better than the overall financial sector. Overall, so if somebody puts a gun to my head and said I could do it, I would actually wait for a little bit of the pullback before entering the trade. So that's mean that I will still stick to December 30th, and I would stick to December 30th, but I would go a little bit deeper in the money. And again, we picked the December 16th to see the activity. Look at this. 135 has 30,000 contracts traded. Isn't that mind-boggling? 30,000 contracts traded. But that's open interest. That's not the volume today. Just look at the volume today. 600, 600 on the December 2nd. 200, 1,000. It definitely 135 is a good area. Now, if I focus on the 130, you see how the price actually increases in the terms of the premium cost for a 130. So for a 130, price increases, and then of course the volume drops quite significantly because you see they're still doing it 135. So whoever knows the inside information is playing the 135. 130 is traded, but look at it, like this is a 10 times greater. This is about the 300 versus the what? 30. I will stick to 135. I'm going to place the 135, 145, and we're going to close the session here. So we are looking at the 135. One contract only traded today. One contract. On the 130, there's a two, but look at the difference in the prices. This is basically $5. This is $10. I'll still pick the 135, 145, and I'll close the session with that. So 135, picking up the 145, $4.37, which means we can make more, 563. Firing the trade in, and now I look at the low of the day. Low of the day is what? 136. Okay, why is this not getting filled? Did they get greedy on me? So this is a closing order, so we don't need to worry about the closing order. These are the cancel orders. Then it just changes to the market order and get filled here. The reason why I want to do the market order and getting filled so I can put my stop below the low of the day. So if I need to fill up one more card, all that will be in that card in terms of the stop, target, and exit would be the following information. So just now have a quick recap over here. So we would have a target at 145. We're looking at the JP Morgan Chase currently being at 136. What is that? 83. LOD stands for low of the day, being at the 136, whatever that was. Let me just move it here so I can see it. 136.05. Okay, so my stop could be right here at the 130. See, when I was learning this, I was told don't ever put at the round numbers because the market maker knows that the prices are at round numbers. So you can put something like 87 or 97 or something like that. Just don't put on the round numbers because they're going to wiggle you out, right? And then what bull call are we picking? So the bull call that we are picking is actually 135 is long, and we are selling the 145 call. Okay, but the most important piece of information over here is where's my stop, because on my target what I'm going to do here, I'm going to actually put the alert. So let's do this quickly, okay, and then close the session. And opposite order, good till cancel at the market when the price action is, and I need to drag this in for you to see, check mark here, at or below. And what do we say? Not 136, but something like 35.87. Okay, so we're gonna be scrolling this thing down and making sure that our rules are all set in place. Save, confirm, and take a moment to proofread this. When Tesla, wait, it's not a Tesla, it's a JP Morgan Chase. We are supposed to do this. We're supposed to do on a JP Morgan Chase. Fill orders. Did I get filled? Yeah, JP Morgan Chase. Yeah, JP Morgan Chase. That's what we want to do. So let's not rush this. Let's do single right click, create an opposite trade. It's going to color it in red. It's coloring it in red, and we are clicking the mouse to actually do the rule. And the rule that needs to be placed in here are, first of all, good till cancel. And after the good till cancel, then we need to change. Okay, one more time. Let's not rush. Let's go slowly. Opposite trade. Good till cancel, market order, and when the price action is at or below. At or below 135.87. Save. Take a moment to proofread. Sell JP Morgan Chase when price is at or below 135.87. Fire it in, and now let's set up the target. My target is at 145. So I want to have a alert come to me when we hit the 145, and then I can do that rotation that I like to call. So let's now recap everything that we have did in this session. Everything that we did in this session was we look at the Tesla, we placed the trade on a Tesla for 675. We make sure that we have an adjustment in place in case we reach the 195, which is originally our target. And in that case, we have moved the target to 20. We learned that the delta was at 60, but as we go up, it's going to be 80. And then eventually, when we hit that level, most likely, the delta would be, in my opinion, close to 97. So in that case, you would have a doubling of delta virtually. Although the delta can never go more than a 1. So just be aware of it. If there's anything that we had emphasized today in this session was the importance of delta and how you manage it. So one more time, thank you once again, Mark, Jeff, Joe, Jose, for being in this session. I hope you had a great Thanksgiving, and I'll see you the next month. All the best and stay hedged. Bye.